Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 22nd of June. Starting off with AFC Energy, which may not at first glance look like a very exciting situation, but this is a falling wedge formation that one can draw these converging lines from August last year, and it's been the case that in the latest installment of Bulletin Board Heroes, the falling wedges work quite well, also assuming that there will be an imminent breakout has worked well too. In this case, you're looking for an end of day close above the 50-day moving average and the top of the formation, obviously at 9.93. Above that, we could get up to 13, 14 pence over the following month or so. Stop loss, rather obviously, just below 8 pence as things stand. The other successful setup that's been here on the BBH front in recent times is the broadening triangle. Here we have one at Gann PLC, and the usual message is that once you can draw that kind of formation, the shares tend to be set up for a relatively big run. In this case, it's a consolidation that we've had since last month's peak. We've bounced off the floor of the triangle just above the 50-day moving average, and while we remain above the 50-day line at 48 pence, the big target here over the next 2 to 3 months is 100 to 110 pence. It even looks as though with the latest move higher today, we can stay above the 50 pence or 55 pence level on an end of day close. We should get a reasonable move over the next couple of weeks to retest May resistance. Stock which gave us a nice surprise yesterday was Greatland Gold. In fact, the story of the latest break to the upside came from this falling wedge breakout that we had in the middle of May, and you can see that since then the shares pushed out of that formation, and then they had their climactic move yesterday. Situation at the moment, it looks as though there's some support coming in towards the bottom of the gap, 1.2 pence from the beginning of the year. As long as we hold above that and maybe down to the 200-day moving average at 1.03 pence, we could see further progress towards the next target, which is December support around 1.6 pence over the next few weeks. That would be the nice scenario there. Onto a stock which I managed to resist covering for quite a while now, still recovering from the horrors of a few years back, but worth a mention here at Gulf Keystone in the sense that we have gapped up today off the floor of this rising trend channel from March, promising a target towards 280, 290 still, even after all the gains that we've had, and that target would be valid while we remain above the May peak, which was around £2.20. Next stock is Petroleum, which I haven't covered for quite a while, I believe. Here we're establishing a base, broadening triangle formation, so that's giving us hope that eventually we'll head towards the 6 pence level, which is the October resistance line. If you're cautious on the stock, maybe wait for an end of day or end of week close above 4 pence. We've already made it through the 200-day moving average, that's the black line there. The upside scenario valid at the moment while we hold above the 50-day moving average at 3.24 pence. Another of those broadening triangle formations. This comes in the form of Upland Resources, so it looks like a cracking situation here at the moment. We've got the price action above, way above the 200-day moving average since the beginning of the year. That's way down at 1.96 pence. Just broken above the 50-day line at 3 pence today. And while we hold above this triangle floor around 2.6, we could see a target here as high as 6 or 7 pence over the next 2 to 3 months. So this does look very encouraging indeed. On to a stock which I wasn't going to cover so soon because I've covered it quite a lot recently, but I cover it for a couple of reasons. One, because there are people out there who think that the stock is a zero, so it's always worth seeing how far away from that level the shares can or are doing. And the second point is that yesterday I read probably one of the worst pieces of technical analysis on any stock in any of my 25 or 30 years of charting. It was on a major financial website as well, written by somebody who clearly doesn't quite know how to get the TA right. But I think that the message there was that either it could go above 63p or below 7p or towards 7p, and I didn't quite understand how they managed to have such a wide target area. But anyway, there we go. At the moment, we've had a rebound just above the 50-day moving average at 22.93 pence. That is a bullish sign, especially with yesterday's very positive candle there. The support line there is from March around 28.29 pence. So at the moment, that's the line in the sand on an end of day close basis as far as support. If you're worried about the shares going to zero, you want to see them below at least that line. At the moment, they're still well above it. Some resistance coming in here in terms of the overhead from the middle of the month. So maybe today's high 42 pence is an initial block, but here it does look as though above that floor of the triangle, 28.29 pence, we could head back towards 60 pence for Tern. So not quite the zero yet. Maybe the bears will have to wait a bit longer for that. Finishing off with a stock which I haven't covered for quite a while, called Yolo, and here we can see how we had the gap and the ricochet off the 50-day moving average in the middle of the month, just a couple of weeks ago. And since then, we've made steady progress. This looks like it's going to keep going largely because of that gap through resistance and the very steady price action that we're seeing. Rising trend channel from April, heading towards 13 or 14 pence. So providing there's no nasties from the company, it looks as though while we're above 6p, we could head towards 13 pence over the next few weeks. That's it from me. More updates on Monday.